Ladies and gentlemen, Greg McCloskey with the Forex Quick Look. I'm going to take a look at two of the yen crosses, euro versus yen and sterling versus yen. They have similar patterns, similar risk-focused levels that I want to bring to your attention as we head into the new trading day. So let's get started. Sometimes when you look at a chart, something that really sticks out to you from a technical perspective, at least it does for me. And those levels become levels that you can either lean against or use to initiate a position going the other way. For instance, if you take a look at the sterling versus US dollar, what I see on this chart, especially in the price action today, is how the price came down to the 38.2% retracement in the 200-hour moving average. That's a green line right here. 38.2% retracement is of this last move to the upside. So we had a sharp move to the upside, and we did move below that level and move down to the 61.8%. That's in the past. What I'm looking for is today. And the price held the 38.2, held the 200. So two technical lows held support. So going forward, that would say to me, okay, this level right through here is going to be the key level going into the new trading day. And as long as the price can remain above that, it's more bullish, okay? But and if it goes below it, it would be more bearish. Now the question comes to you. Well, do you want to be more bullish in the sterling versus yen, or do you want to be more bearish? If you want more bearish, you want to see the price move below these two levels. If it moves below those two levels, that's something new. That would be an additional something that didn't happen today, happen tomorrow. So you anticipate that break to the downside, and if it does break to the downside, you want to see the price stay below that level and move its way through the 50% retracement, and then maybe below the 61.8% retracement, which was near these lows right through here as well. So that would be the progression to the downside, but it all would start right there. And conversely, on the top side, you have an option to stay long this currency pair, or go long this currency pair with a stop if it breaks below this 38.2% retracement and 200-hour moving average. So you know your risk. The question is, where do you want to get in? Where do you want to lean against? And what you're hoping for is that the price moves in the upward direction, and maybe takes out the high price that we saw on just 2 days ago in trading in that the sterling versus US dollar. Now let's take a look at the euro versus yen, and again we'll look at the hourly chart, and again let's focus on what's happened more recently, more specifically today. And what we saw is, it's a different looking chart than the sterling versus US dollar, but what is similar is that this moving average held support a couple of different times here at the lows, and also the converging 200-hour moving average held support as well on the dip later in the afternoon. So guess what? Going into the new trading day, these moving averages are going to be key for the buyers and sellers, as long as the price can remain above. And if you want to be long, that's where you would lean against. You wouldn't want the price to go below those levels. Conversely, if you are more bearish on the euro yen or the yen crosses or cross pairs, then you want to be patient and wait for the break of these 100 and 200-hour moving average. Why? Because it held today. So wait until it goes below those levels and it stays below that level. And as long as the price can stay below that level, then you start to look toward the 38.2. You look for that level, look for the 50% retracement. All those levels will be targeted on the downside. So that's a look at two of the yen crosses. Both of them have similar moving average support. Buyers against their moving averages in trade here today. We'll see if that continues during the day, or do we break below those levels and start a reversal of the bias that we had in trading here today. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.